Good morning, investor. You are now on KleverStock with me, Anujarya, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened lower on Friday, tracking Wall Street's downbeat session overnight. At 9:10 a.m., the FPM KLCI declined 5.28 points to 1,608.92 from Thursday's close of 1,614.20, after opening 4.31 points lower at 1,609.89. The market breadth was slightly negative, with 197 losers outpacing 112 gainers. Meanwhile, 263 counters were unchanged, 2,097 untraded, and 60 suspended. Turnover stood at 147.02 million shares, worth 63.60 million ringgit. Rakuten Trade Senior Berhad's Vice President of Equity Research, Tong Pat Leng, attributed the weakness to disappointing corporate earnings in the United States. He said the Dow slipped 0.23% to 47,522.12. The S&P 500 declined nearly 1% to 6,822.34, while the Nasdaq fell 1.57% to 23,581.14. He added that sentiment was supported by the recent U.S.-China trade deal and expectations of a more accommodative U.S. Federal Reserve. Thong said we anticipate a buying interest on attractive valuations and stronger turnover, with the benchmark index likely to hover between 1,610 and 1,620 today. Among heavyweights, Maybank and Public Bank eased 1 cent each to 9 ringgit and 88 cents and 4 ringgit and 21 cents, while CIMB Group rose 4 cents to 7 ringgit and 35 cents. Tenaga Nasional declined 4 cents to 13 ringgit and 28 cents, and IHH Healthcare added 3 cents to 8 ringgit and 23 cents. On the most active list, Perak Transit and Revenue Group dipped half a cent to 36 cents and 7.5 cents, while TWL Holdings and NextG Bina were unchanged at 2.5 cents and 5 cents. Omesti slid 1.5 cents to 6.5 cents. Top gainers included Malaysian Pacific, which surged 22 cents to 30 ringgit and 48 cents. C-Hub Consolidated rose 6 cents to 79 cents, and Sarawak Oil Palms and KSL Holdings advanced 4 cents each to 3 ringgit and 56 cents and 3 ringgit and 2 cents. AirAsia X added 3 cents to 1 ringgit and 84 cents. Top losers were MISC, which fell 43 cents to 7 ringgit and 40 cents. Chin Tech Plantations dropped 36 cents to 11 ringgit and 38 cents. Bursa Malaysia eased 14 cents to 8 ringgit and 18 cents. Kuala Lumpur Kapong fell 12 cents to 20 ringgit and 76 cents, and Petronas Dagangan dipped 10 cents to 22 ringgit and 58 cents. Moving on to local currency updates. The ringgit opened almost flat against US dollar as traders and investors reacted to the US Federal Reserve unexpectedly hawkish interest rate cut on Thursday. At 8 a.m., the ringgit stood nearly unchanged at 4.1935 or 4.2050 against the greenback, compared with Thursday's close of 4.1935 or 4.1985. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid said market sentiment remained cautious as investors assess how the Fed might set its benchmark rate in December, amid limited economic data due to U.S. government shutdown. He said there appears to be a de-escalation in trade tensions between the United States and China following the meeting between U.S. President Donald Trump and Chinese President Xi Jinping in South Korea. The discussion resulted in trade concessions, including a reduction in average tariff rates for Chinese goods from 57% to 47%, and China's agreement to resume purchases of U.S. soybeans. Muhammad Afzanizam said the ringgit depreciated 0.20% against US dollar to close at 4.1960 on Thursday, with the dollar ringgit intermittently breaching the 4.20 level during the session. He said the ringgit is expected to maintain a cautious tone, with the dollar ringgit likely to trade within the 4.19 to 4.20 range. At the opening, the ringgit traded mostly higher against major currencies. It edged up against the Japanese yen to 2.7246 or 2.7323 and strengthened against the British pound to 5.5182 or 5.5334, but eased versus the euro to 4.8527 or 4.8660. The local note traded mixed against ASEAN currencies. It improved against the Singapore dollar to 3.2260 or 3.2354, but slipped vis-a-vis the Thai baht to 12.9693 or 13.0129. It was almost flat against Indonesian rupiah at 252.0 or 252.8 and steady against the Philippine peso at 7.12 or 7.14. Now continuing with foreign economy updates. Xinhua reported that China's Ministry of Commerce on Thursday unveiled the outcomes achieved by both Chinese and US delegations during their recent economic and trade talks in Kuala Lumpur. The US side will cancel the 10% so-called fentanyl tariffs and suspend for an additional year. The 24% reciprocal tariffs levied on Chinese goods, including goods from the Hong Kong Special Administrative Region and the Macau Special Administrative Region, according to a spokesperson of the ministry. China will make corresponding adjustments to its countermeasures against the aforementioned US tariffs, the spokesperson said, noting that both sides have agreed to continue extending certain tariff exclusion measures. The United States will suspend for 1 year the implementation of a new rule announced on September 29 that expands its entity list export restrictions to any entity that is at least 50% owned by one or more entities on the list. China will suspend the implementation of relevant export control measures announced on October 9 for 1 year and will study and refine specific plans. The US side will suspend the implementation of measures under its Section 301 investigation targeting China's maritime, logistics and shipbuilding industries for 1 year. In response, China will correspondingly suspend the implementation of its countermeasures against the US side for 1 year, once the US suspension takes effect, according to the spokesperson. In addition, the two sides also reached consensus on issues including anti-drug cooperation on fentanyl, expanding agricultural product trade, and the handling of individual cases involving relevant enterprises, according to the spokesperson. Both sides further confirmed the outcomes of the Madrid economic trade talks. The US side made positive commitments in areas such as investment, and China will properly resolve issues related to TikTok with the US side. The China-US economic and trade talks in Kuala Lumpur have yielded positive results, demonstrating that upholding the spirit of equality, respect and mutual benefit, and through dialogue and cooperation, the two sides can find solutions to the problems. Noting that the outcomes are hard-won, the spokesperson said China looks forward to working with the US side to jointly ensure that the implementation of the outcomes and inject more certainty and stability into bilateral economic and trade cooperation as well as the world's economy. Moving on to corporate news update. Perusahaan otomobil kedua Sdn Bhd, or also known as Produa, will likely introduce countermeasures to cushion the impact of a potentially shorter loan tenure on car buyers. Produa President and Chief Executive Officer Dr. Sri Zainal Abidin Ahmad said the company is assessing how such changes could affect vehicle affordability and overall ownership cost. He said in the past, Produa was known for being cheap. Today, we're talking about affordable mobility as a lifestyle. Zainal noted that even if shorter loan terms weigh on buyers in the near term, Produa is prepared to roll out measures to help ease the transitions. During Japan Mobility Show 2025 this week, he said, over time, we expect minimal disruption given Produa's strong resale values and emphasis on total cost of ownership. For the electric vehicle EV segment, Zainal said Produa is also exploring innovative ownership models, including battery leasing, to keep entry prices within reach of mass market consumers. He added, our EV customers will be different from our ICE customers, and our pricing will reflect that. But God willing, we aim to maintain a stronger resale value than many other EVs on the market. Zainal's comments come as regulators and financial institutions weigh adjustments to auto financing terms to strengthen household debt profiles. Industry observers say any shift towards shorter tenures could reshape car buying behavior, particularly in the entry and mid-market segments where Produa dominates. Produa's focus on total ownership value, flexible financing models, and EV affordability reflects its broader goal of sustaining market leadership while aligning with Malaysia's evolving automotive and financial policy landscape. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Bursa Malaysia Berhad has received approval from the Securities Commission Malaysia for the proposed SC fee applicable to Bursa, along with revisions to selected listing and regulatory related fees for listed issuers and market participants to be imposed by the exchange. Cabinet A Berhad Chief Executive Officer Tan Sri Tony Fernandez expects the group to exit its Practice Note 17 status by December. EWI Capital Berhad has committed 100 million Aussie as an anchor investor in the Trust Capital Australian Office Fund number 3 as it transitions towards an investment holding model. And next we have AWC Berhad, which has secured a 99.1 million ringgit contract from TM Technology Services to Berhad to provide integrated facilities and management services for TM Data Center and buildings at TM Central 1. And last but not least, Farm Niaga Berhad is acquiring 2 logistic properties in Terengganu and Sarawak for 30.5 million ringgit to strengthen its nationwide distribution network. Well, that's a wrap from Morning Bell Updates with me, Anujara, on KleverStock. Thank you for choosing us investors. Stay tuned for the next live coming soon.